Yesterday we had a bit of down under data coming out. Now first up in New Zealand was the National Bank Business Survey, and that did show quite a drop in general business sentiment. Now we do tend to find that firms' views of the overall economy can fall quite sharply during times of crisis. Natural fact, it's held up pretty well in the preceding couple of months. What we do tend to focus in that survey is businesses' views of their own activity. Now that also softened, but it's back to about average levels instead of above average levels. So it does still seem to be indicating a degree of expansion. But one worrying detail in the survey was profit expectations did fall quite a lot, particularly in the agricultural sector. And this survey would have predated the Fonterra announcement that we had about that slightly reduced payout. The survey does seem to be pointing to more growth, but a relatively moderate growth compared to, say, earlier on when the survey was at its peaks. In Australia, inflation figures came out, and whilst the headline figures showed inflation still relatively high at 3.5%, the underlying inflation measure was only up 0.3% over the quarter. So there's a lot more expectation, a lot more speculation, in fact, that Australia will cut rates, and there's a lot of focus on the next meeting in early November. All eyes are on Europe at the moment as they discuss the European crisis. It does seem like there's been a little bit of progress overnight. Apparently there's been an agreement on how to recapitalise the banks in Europe. So the next step is we've got the French and German leaders heading to Brussels to meet up with Greece's creditors to discuss what sort of haircut Greek debt will take. Now the talk we've had recently is anywhere between 40 and 60% of a haircut on the value of that debt. We also saw overnight discussion that perhaps China will get involved in the rescue package. It does seem like France's leader is very keen to draw China in, and China does have a lot of financial firepower. So that will be a development to watch out for to see whether there's much truth behind that as we go forward. Italy's been under a bit of pressure. It recently issued some 6-month bills to help with its short-term financing. Whilst it still found plenty of buyers for them, the yields on those have crept up about 0.5% from last month. And we have seen in Italy a lot more efforts to go through and find a little bit more fiscal austerity to squeeze out as well. Markets overnight ended up roughly stable. Currencies were down and then up, particularly when the Chinese rumour came out. And in the US, we've seen some good profit results, particularly Boeing, and that sort of helped their market hold up a bit.